Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be taking a look and kind of deep diving a trade that we had in the room this morning on the NASDAQ. So first off, this kind of goes over a few things. I've had a couple questions about, what it is that I do in terms of trying to find these locations and how to really get everything settled so that we know ahead of time where the areas of interest are that we want to trade. How do we make the game plan? So first off, it comes down to starting on the 4-hour chart, right? We're going to zoom out to the 4-hour chart and just generally see what's the market doing, right? Where are we in the big picture? Now, keep in mind, this is starting off at 9 o'clock in the morning, so 9 o'clock in the morning was over here. We didn't have this big bull push. But coming into the morning session here, where is the NASDAQ? In the grand scheme of things, we're just kind of in the middle of a range. We're not really doing much of anything. Buyers tried going higher, sellers tried going lower, and nobody's really winning. We're just kind of stuck in the middle of movement. It's very nice to finally see a pullback on the NASDAQ, by the way, but where we are is, maybe a little bit sideways, range bound. We could be buyers, we could be sellers. There is no bias that we're getting from the 4-hour chart. Okay, let's zoom into a faster time frame, like a 60-minute chart. Pull this back a little bit further and see, are there any areas of interest that are starting to gear up that really kind of give us a clue in what to expect? The one big thing that we saw right out of the gates here was that there was a cipher pattern that set up with that higher high and dipped down for the 786. Right? If you're not familiar with a cipher, you typically want to see price hold between the 382 and usually back down to like the 618, and the blow-off zone is between 13 and 41.4. So you get a little bit of a harmonic pattern on the highs that dipped all the way back down to a 786 hold. So we're getting some reasons to believe that buyers might be coming in here with some emphasis. Sure enough, man, when the market opened, they went flying. So what are we looking for? Well, we know that we have a range-bound to slightly bullish sentiment. Now we can zoom out and see, okay, where are there levels of structural importance? Obviously, there's a level of structural importance down here, right? Very interested in becoming a buyer down here if it dips down there. And if it goes higher, there's obviously a zone of structural interest up here. We've got a lot of support and resistance. They gapped way underneath it when the market came back. They held as resistance. Everything is lining up in the same spot. So we have our zone. Now you can go further and calculate standard deviations. You can use indicators to show you where things are, whatever. It just so happened that there was a positive 1 deviation right around that same area. So what are we looking for? Well, like we talked about a couple videos ago that we uploaded, we need to see the traders actually show that they're interested, and that's where zooming into something like a 15-minute chart, a 5-minute chart, a 10-minute chart, something like that where we're getting a little bit closer and seeing, hey, is there an area of interest? And as we zoom in, there's that bigger zone that we were just looking at in the 60-minute chart. Obviously, if things are stacking up in the same spot, I'm going to be interested in becoming a seller right there. And yeah, that does mean that you're selling in the face of a very strong rally higher. But now we can go into a faster time frame and look at it objectively and say, okay, well, I know that zone of interest, and I'll just drop a line right there. I know that zone of interest is where I want to be looking to be a short seller. But, right, I got to be careful because there's a huge amount of bullish sentiment coming into this market where we've got big bull blow off, little bitty pullback, right? Nice blow off, little bitty pullback, big blow off, finally. We have the largest pullback that the NASDAQ has given us the whole day, right? We finally have a halfway decent pullback. Now, that doesn't mean that I'm just going to go selling. But what that does mean is that buyers are no longer likely going to be interested in buying above the highs. They're trying to buy the pullbacks, right? They want to buy the dip. They want to buy when it's cheap and then sell when it's expensive. And when it's expensive, it's going to be up here. Now, what helped this trade a lot, and I haven't shown you where I got in yet, but what helps this trade a lot is the fact that the buyers tried, failed. Tried, failed. Tried, failed. Their objective is the high of day, right? So they're growing impatient. We're seeing that psychological aspect of like, oh, come on, just go, just finish the job, right? Get it over with. So when it finally pops into the highs, that first scent of weakness, that's the selling opportunity to jump on in. We know that sellers have proven to us that they're interested. We're in a massive zone of interest, both on the 4-hour chart, we're neutral to slightly overdone on the 60-minute chart. We have harmonic resistance. We've got all this stuff just compiling together into this one giant cluster of a zone, and that allows us to look for a shortable opportunity. So where do we jump in short? Right there, 91.50 quarter, ride it down to when it starts becoming into value at 39.75. Now, it went a lot further. But that's the importance of waiting for the market to come to you, right? Let the market come to you, show you that there's interest, right? In a major zone of support, harmonics, fibs, whatever your thing is, but wait for them to prove to you that they're interested. And that first sign of blood, right? Right there, that's where I want to start jumping in, looking for that fade back down. Beautiful move back down. Caught a good chunk of the meat on the bone, right? And keep in mind, this is while the market is moving 100 ticks in a 1 minute candle, right? This big blow off to the downside. So we're in a period of huge volatility, and it worked out perfectly, right? That's why it's so important to go out, start on the bigger time frames, and give yourself a frame of reference, right? What am I looking to do? Where am I looking to do it? Go into a faster time frame. Okay, now let's get under the microscope a little bit. Where does it look a little bit better? Start pinpointing where those areas are going to be. And then zoom into the really fast time frame, like a 1 minute chart or a tick chart or a volume chart or whatever your thing is, and look for that transition of when the buyers stop pushing as hard, right? Let them rotate into a decision point where the market's going a little bit more sideways, and then sniff out where that weakness comes in, and then you have your opportunity to ride the rest of the wave back to the downside. Beautiful move on the NASDAQ, but just wanted to cover it in a kind of a grand scheme of things, starting from the top, working your way up from a 4-hour chart, a daily chart, and working your way in all the way to a 1 minute chart to locate those zones of interest. Fantastic trade this morning, and definitely wanted to take some time to cover that one. But that's going to do it for this one. I hope you found it useful, interesting, entertaining, and maybe something to think about if you don't already implement this type of approach where you're starting off with a bigger time frame, finding that frame of reference and giving yourself some reasons, and then really zooming in and nailing down those reasons. It can really put away some great trade opportunities that can set up and present themselves to you, and it happens every day over and over and over again. That's going to do it for this one. Like I said, if you have any questions, shoot me an email, jbrink@slingshotfutures.com. Hope you enjoyed the video. Until the next one, we'll talk to y'all then. Thanks.